Friday. What's up, everybody? Friday morning. Welcome to this edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys had a great day yesterday as we saw a little bit of a rally up in our markets. And is that going to continue? Well, the only way to know is to look at them today. If you're new to the channel, make sure you click the subscribe button, hit the notification bell so you get the alerts and the updates. Let's go ahead and dive in, starting with the S&P. Now, today we're down 12 points so far, but I put up a daily chart. And I don't normally talk about daily charts in the DMC because, frankly, we're looking at day trades, and I don't really use the daily chart when day trading. But I do want to pay attention to something unique that has occurred on our daily chart, and it's the fact that we have put in an official higher swing low on the daily chart. So the higher swing low that we've put in right here is something that really does mean a lot. Now, that higher swing low means nothing if we cannot get a higher swing high. So right now, we're in a pretty interesting point where we have to get above this high. So the high there was 39.50. So the market really has to be able to get above 39.50 in order to confirm that this lower high is of any importance. Matter of fact, when you get a higher low, when you get a higher low that does not give you a higher high, that's actually a sign for further weakness. When I look at this on the weekly chart, we can see that our momentum is our downside momentum is definitely slowing a bit. April and May were a hot mess until we had a really strong at the end of May, and now July we've actually had, end of June was a strong weekly move up. And then we've actually had another week up, this week so far. Now, I will say that our volume is still fairly low. So today's volume would have to have a fair amount of strength to it in order to really cement that it's back to a more normal week. But our volume still pretty low, even for a holiday weekend. But I will be interested to see on a holiday week where we weren't open on Monday. I will be interested to see if we wind up getting higher than this volume that we had on the week of June the 20th. Now, why is that relevant? Well, because we also lost a day of trading that week as well due to the Juneteenth Day of Freedom holiday, and so it's a good comparison. And I need to see a big strong move up on some sort of either increased volume or at least above average, because when I don't have good volume on a move up, at least even average volume on a move up, what that tells me is that the market just really isn't giving me much follow through. You can see that when we had these two big candles earlier this year, here and here, that was accompanied by lower than average volume, right? And that lower than average volume meant that we were not able to sustain that move. This move up here in May 16th was actually accompanied by slightly higher than average volume, but our move up June 20th was lower than average volume, and so I want to see if we get a big volume day today. Don't know, if we will or what that looks like, but I definitely want to pay attention to volume today to see where we end up. Now, that being said, as a day trader, and let me get rid of my volume here. I don't necessarily need this as a day trader. As a day trader, I'm going to follow my trend. And my trend right now, I do have slightly higher swing highs, higher swing lows, telling me that I can look to be a buyer. Now, we have reversed off of this 1 hour level right through here. But certainly that level, as we entered that position, we came through the distal side before you would have gotten a confirmation entry. And so now with my 4 hour being as it is, it tells me that I have the right and should highly consider being a buyer. So with that being said, what I'm going to do is wrap my lines around this area here because I think that is a pretty decent little taking off point, 38.67 by 38.57. That's a level that was formed yesterday. Fairly good opportunity to get long on a pullback into this region. When it comes to the NQ, the Nasdaq, we are sitting below this area of supply here, but we've come close to it once without getting in. And so the level is still valid for certain, but it has to be a confirmation entry because we're going against the big picture trend, which on the 4 hour is still bullish. So if I look at this right here, this would be 11,948 by 11,906 as our kind of pullback long entry in the Nasdaq. Looking over at the Russell 2000, also a level that we bounced off of, starting to head down. It has a much, much stronger speed candle in here. We do anticipate a lot of times these speed candles to get retraced anyway. So with that speed candle being in there, you're looking at right at a, oh, I'm sorry, that's crude oil. I don't know why I have crude oil in here. Let me come back to crude oil in a minute. I was on the wrong chart. We'll go to the Russell. It's like crude, the Russell can't be 100. But the Russell also has a speed candle, which we anticipate getting retraced. Let me get rid of some of these lines here. All levels that we've either bounced off of or come close to in the past. There we go. 1740 by 1733 would be, I think, the level to look for in the Russell. Now going to crude oil. Crude oil actually has a nice speed candle here starting at 100. We got below 100 and the whole world got excited. Woohoo! We're below 100 in oil. And then the market smacked him in the mouth and said, "No, you're not." Kapowie. We didn't really get a breakout opportunity, right? We talked about a breakout below 98. We didn't really get it because we got no basing. So there was really no entry for us on any of this. There is this area here does become a potential buying area on a pullback, but understand that our 4 hour trend is still down. And so at this level, while it's a pretty clean level, needs to be a confirmation entry because it is going counter to our big picture trend. If we base inside this level at all, I would say to look for a potential breakdown. Now, remember, if you decide you want to get into an oil position and you want to hold it over the weekend, just be aware of any gaps that you may face, but that would be something to consider. Gold, looking at GC, we can see that gold has come down. It actually cut right through a pretty decent demand area. That would have been a confirmation entry anyhow because our big picture trend in gold is down. So it really gave you no entry, but we are setting up for a potential breakdown in gold right below these lows at 1731. I think that would be the next most logical place for a reversal. The 15-minute level, which we looked at the other day, this little base drop, gave us a very clean entry and a very strong move away. So hopefully you're able to take advantage of that move. This would be the next one, would be the breakdown below this level here. So that's all I have for today, everybody. I hope you guys have a very good and safe weekend. If anything comes up, please feel free to shoot us an email, support@tradersarmy.com. Until Monday, everybody, I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.